Hey everybody, good afternoon. This is David Blake with the Tuesday Tech Talk. Today we're going to quickly review the last couple of days in the market, try to figure out what's happening next. There's a couple of different sectors that I want to go over. Today's talk is called How to Energize Your Portfolio. We're going to look at the energy sector, which was the best performer last week, and try to figure out some stocks we might want to pick up here while we're getting a little bit of a breakout in that sector. Okay, first off, we want to take a look at the Dow Jones. Last week we had another up week. I think it was the 8th week in a row. We ended up on Friday at a new record high. The index was up about 105 points, or about 0.4%. CTI right now is a bullish +6. That's the cyclical trend index. Momentum fell to a neutral -3 from a -1, so that's a little bit of a red flag, showing the momentum is really starting to slow down. And sentiment was a neutral 0. That was, I believe, unchanged. We do have some negative divergences showing up. MACD crossing the bearish ground. Also, the 14-day RSI was not making a new high, as the Dow was making a new high. Internal breadth also failed to confirm that new high. We had only had about 50 units on the new NYSC up, and the Nasdaq actually had a down week for the AD line. Okay, here's the NYC Advance Decline line. As you can see, the upper right-hand corner there, we're starting to see a little bit of negative divergence as we're seeing less and less stocks participating in the rally to new highs. Not too bad yet, but something we want to keep an eye on. This here is the NYSC 52 new week high versus new lows. A little bit of contraction on this, nothing too bad yet. But for a strong market, we'd like to see the new highs up around 200 or higher if we were going to be getting ready for another leg up. Now we have the S&P 500. You can see the channel moving up. We got a little bit overbought in here. When you see the market going above the channel, it's called a throwover. But we also have just a tad of negative divergence showing up in this also. You can see the MACD again started to pull back while we were trading sideways after that big move up, and also had the 14-day RSI not making a new high to confirm that breakout high to with the S&P 500. Okay, here's the Nasdaq. The Nasdaq looks good. No negative divergence in any of these indicators. This looks like it still wants to work higher with that strong technology and semiconductor move that we've been having. We have a new, we have a little bit of divergence in the Nasdaq Advance Decline line. This last made a high around October 6th. So if we're going to have more higher highs on the Nasdaq, we want to see this turn around. We're also down about 1,000 units today on the Nasdaq Advanced Decline line. So we're starting a little bit worrisome. That just means that fewer and fewer stocks are participating in the index's move to a new high. Again, we look at the Nasdaq new highs, new lows. A little bit of contraction, kind of stuck in a little bit of a range. I wouldn't really call this negative divergence yet, but again, we'd like to see this breaking out to maybe about 250 or so on the new highs if we were going to continue this leg up. Moving on to the Russell 2000, we were actually down in the Russell 2000 last week. All the other indexes were up. We want to keep an eye on this. We're having this little bit of a flag pattern while this thing works off its overbought condition. We had about a 10 or 11% move from mid-August up into the 1st of October. For this to really start to pick up some strength and to turn these indicators on the bottom of the page higher, we're going to need to see a pickup above probably 1510. What we want to watch on the downside is we want to watch a break below that channel of about 1485 maybe. If it breaks below that, it's going to test the 50-day moving average around 1469. Now we're off today about 16 points, so we're right around 1480. So one more bad day, and it's going to be more than just a red flag, and we're going to have to maybe take a look at some of that. As you can see, the technical indicators are also deteriorating on that. Now, even more of a concern, we have this. This is the Dow Jones Transportation Index. In the last couple of days, it's come down and actually tried to hold the 50-day moving average. As of today, though, it actually broke below that level. We'll have to see where we end up or whether it can rebound possibly tomorrow. or later on in the week. But you're seeing the negative divergence in these, or actually deterioration in the different technical indicators. So we'll keep an eye on that. Today's a negative day for the broader market, but the Dow Jones Transportation Index is now leading the market lower after that big surge we had through September. So that is actually a little bit more than just a red flag. It's showing how the slowing momentum in the broader index may be something that we're starting to show a little bit of a toppy, market here. Okay, last index I want to show you real quickly is the Semiconductor Index. We broke out the new highs last week. We broke out the new highs today again. And it was a little bit extended. We're overbought. However, we don't see any negative divergence in this indicator. The semiconductors had a heck of a day. You can see it gapped up in the upper right-hand corner there on yesterday. That was partially due to the Broadcom's buyout offer of Qualcomm for $103 billion. So another thing to keep an eye on when you get these big giant mergers, you also could be nearing the top of a market. All right, so what I want to look at today, before we get to that, we had the best performing sectors last week. It was all about energy and technology. This is including through today and Monday. I think the energy was actually up about 2% yesterday, but for the last week, since last Tuesday, it's up 3.43%. Technology is up over 1%, and industrials and financials have also drifted a little bit higher. So here's the energy XLE. This is the energy sector. Starting up here in the left-hand corner, you can see where we topped out last December. No point or anything, or no? Okay, I can use that. Okay, we pointed out over here in December of last year. And then we started this long trend going down where we kept you out of the oil-related stocks in the energy sector through here. We finally bottomed down here in mid-August, and then we bounced off of that. Now, we told you we thought we could get more of a, this would probably be more than just a dead cat bounce on this. We started to see accumulation picking up, and as we broke that big trend line, and we went above the 200 or the 50-day and the 100-day moving average, and we've actually gone on now to go over the 200-day moving average, which is bullish. We also have retraced 50% of this total move going from last December down here to the August. Now, 50% usually is a resistance level that you want to watch. If it can't break through that, it usually will come all the way back down. But we came off of that. We came back down to the 31.8% Fibonacci retracement, which also coincided with the 200-day moving average. Hit that, bounced off it again, cleared the 50-day for a 50% retracement, and now we're up here at the 61.8% retracement. If we break this, and I think we will, the way that the accumulation is, we probably will retrace this whole amount. That would take us back up here to where we were back last December on the XLE. Good accumulation down here. I like this. The MACD is also confirming that higher prices are probably in store. Okay, now this is a 5-year chart of energy, the XLE. The reason I'm showing this is because when you have a major trend break, this back here, this trend line here in energy can go back about 5 or 6 years. And when you have a major break like this, normally something fundamentally has happened to the to the either the sector of the stock or whatever's going on. In this case, we broke it, textbooks fashion. We came back up, ran back into that trend line, which was now resistance, and then we worked our way back. Now, this represented oil being up around $100 a barrel. We finally bottomed down here around $26 a barrel with oil. So you wonder what happened fundamentally that changed this, so that you no longer bought the dip. Well, number one, we had fracking kicked in at that stage. You also had oil was getting cheaper with the American companies producing as much as they could at that time. And when that happened, of course, they also had a big push in electric cars. So fundamentally, things changed on the strength of oil, and that caused this big pullback in that. We'll also look at oil here in a minute. Okay, we bounced off that low, broke this descending trend line, got a little bit of a narrow range going on here, and then this last year here, we caught this thing here, kept you out of that. But now you can see again, we've broken a pretty good trend line, and we're up here, battling with that 200-day moving average, which I think we will probably break above that. And as far as oil right now, I think we actually hit 58 or 57 something this morning. Our upside target once we broke 55 was going to be 60 to 62, and that still looks like the case. There's about outside chance maybe we get to 68. Not so sure, because as the prices go up, we're going to have more fracking wells and stuff coming back on board. Now, also over here, what caused this thing to break? Again, fundamentally a change. We had OPEC cuts were starting to stick, and that it was big for the for the oil and the energy sector. Now, one of the things we're looking at right now with this line here with oil, I'm going to see if that's the next chart. As it was not, we'll get back to it. But what we're seeing fundamentally going on right now, U.S. gas demand is also close to a record high. It's on pace out to last year's record number of miles driven. Global demand is also increasing. We've had economic activity is accelerating with this synchronized global recovery that we're in right now. We're also getting some disruptions in oil supply around the globe. That always will cause oil to spike. And now this last weekend when we had the Saudi disruption, we had that caused oil to spike, I think 2 or 3% on Monday. So we want to watch that, because as far as oil prices begin to go up, you're going to have right now, I believe, FactSet, with positive earnings coming out here. The energy and sector, the stocks are prepared right now to show about 136% increase in revenues year over year, I believe, or in earnings. I'm sorry, in earnings. And they're also expected to show almost a 20% outperformance in revenue year over year. So they're going to make money. With the frackers have all kind of they're ready to go once oil gets to a certain stage. But at this point, we're not going to they won't come back online, because they can't be profitable until oil gets up, stays up over $50 a barrel. So we'll kind of watch that. Okay, last week the worst performing sectors, real briefly, were consumer staples and materials. And this slide real quickly just shows what the performance in the major indexes, major averages. As we mentioned last week, when you have a market that's up this much, you kind of have to think that momentum is going to be somewhat limited from here. A lot of portfolio managers, money managers are going to be locking in any kind of before anything starts to pull back. They're going to try to lock this in. So this is how they market their performance. They want to show something. If they can show a 20-some% performance this year, they're going to do it. So if we do begin to roll over, you could see some acceleration in selling, just as people begin to lock into this. All right. What I want to do is as we see this breakout in the oil industries, if you go to Market Edge, where we have an analysis tools under advanced tools, we have a complete industry group analysis that is proprietary to us. And we divided the oil stocks into 4 different industries: oil field drilling, oil secondary, oil equipment and service, and also oil majors. Now, these numbers over here are what the industries are doing on the 50-day relative strength. And what you want to look for when you're having a breakout, you want these industries to be outperforming the S&P 500. In this case, the drilling stocks are outperforming the S&P 500 by 16%, secondaries outperforming by 13%, and so on. So not only are we getting that breakout, but we're also, if you're buying these, you're going to be outperforming the S&P 500 going forward. All right, now this is light crude oil. This is also a few years, going back a few years on this chart. As you saw back here where we bottomed out at that $26 a barrel, then we bounced off of that and we came up here to around the 45 area. And basically we've been stuck in a sideways trading range since March or April of 2016. We played this several times. We got the up and down. We had shorted up here at this resistance, buy it back down here at this support. And now if you're talking, everyone's talking about the breakout in oil. But we've only had a breakout that's lasted, basically started last week. So we've got quite a bit of juice left in this thing. This move over here, these are weekly candlesticks that we're looking at. This saw crude oil go up probably about 17-18% in September and October. We have not had a 20% move in the oil stocks yet. So there's still plenty of upside that I think we can get onto this. All right. So what we want to look at in here, where, without listening to the webinars all the time, you log into Market Edge. And what I want to try to do today is show you where you can actually go to find stocks and sectors that are breaking out. Now, one of the most obvious is if you go into trading ideas, click on upgrades and go in there and you just find out, look at the stocks today that have upgrades. If you make a chart or a report output thing on there, you can put the relative strength on there yourself. So this way, if you look at what oil stocks were upgraded today, and you can also look at which upgrades also have a 50-day relative strength above 1. Now, I've gone ahead and put a few of them out here today. The first one here is SPN. It's called Superior Energy. It was an upgrade today that looks fairly good. We had this big pull up here, came all the way back down to this support level in here. The indicators are starting to show positive. We had an oversold market up when we had this pullback, and now we're seeing the accumulation sharp. I always tell our listeners when we see a accumulation like this where it really spikes, that's institutional buying. Now we'd like this thing. I believe has some more upside to it. We just broke through the 100-day moving average. Yesterday. I think we can probably get a trade in this SPN up to around the 200-day moving average around 1176. So that was just upgraded today. And again, you're not buying this at new highs, so that's something you can look at. Another one that came up today was SWN, Southwestern Energy, and a lot of these oil stocks are going to be between $5 and $10. So you're not looking out here to go from $10 to $50 when you trade these things. And like I say, if as long as the oil keeps butchering up towards that $60 range, I think you're going to get a nice move. And a 20% move on a $10 stock is only going to be $2. So with SWN, you have this little bit of resistance level here going back about back into the early summer. We're in that range right now. We break above that. I think we could get a push on this thing up into the 200-day moving average. You're starting down to see here you have this declining distribution over here, and we've just broke above that line on accumulation. So they're just starting to buy that. Again, you've moved from 6 to or from 5 to about to 6. That's a 20% move, but we still have some more upside on this thing. So the MACD is bullish, and once we get above 70 on that on the RSI, I think you can see a little bit more upside on that. Another one that was upgraded today, ERF. This is called Enter Plus Corporation. We had a nice pullback here during this time. You're seeing this spike in the accumulation again. We got just a tad overbought on this, but the MACD looks strong. You also see volume strong over here, starting to pick up as we're starting to move higher on this. If you stay within this channel on ERF, you're looking at a trade here from about 9. And I think today is a good day for you to buy some of these stocks on Tuesday because after yesterday's big move, we did have a bit of a pullback in oil, and some of these stocks have actually pulled back just a little bit today. But this stock in here around 9 and change should be able to get a trade in this up to 1050 or higher on that. Okay, what we're going to hear now. Look, we've identified some groups that we want to be in. Another place you can go besides the upgrade and downgrade module would be the point and figure breakouts and point and figure early alerts. Now this is a stock. The symbol is UNT. It's called Unit Core. Been kind of in a trend or in a range all the way through here. We're just at the point right now we're starting to break out of this. We broke above the 200-day moving average yesterday. We're having a little bit of a pullback here, and we should probably move higher on that. MACD looks strong. As you can see where we had the distribution, and we turned on a dime on that, and now we're seeing a breakout in the accumulation. So UNT is one that also had a breakout on the point and figure chart. I had whether these were double or triple tops, but I can't find my notes on that. Anyway, you can go in there today and see what the point and figure breakout was. All right, here's another one. This is PTEN, Patterson Energy. Again, you have a downward descending trend line off of this. We had the pullback that most of these stocks had in October. Now we've broken out above the 50 and 100-day moving average. Had the 50 cross the 100, and we should get a move up here, probably through the 200. All the indicators look good. We had a little pullback, and now we're getting around the accumulation. So PTEN is also breaking out of a. This when it trades up here at around 21, you're going to get that point and figure breakout. So this would be off of the point and figure early alerts that we're looking at. Another nice chart that I like in here is DRQ. This is drill quip. One of the top oil industries was service and equipment. So this is one that provides service for them. We got the turnaround. It's just starting down here. A lot of these charts you're also going to notice kind of a cup and handle. Here's the cup. Here's a handle on this. So once you break through this handle, which we did yesterday, and we had a little bit of a pullback today, this should work its way up higher. Your next resistance is up here around 49. We're at 46 and change now. Breaks to that 200-day moving average. We could get a little bit of a higher move up to these levels over here, which would be where we were this past summer, which would give you a trade from about 46 up to maybe about 52. So I do like that a lot in here. It's a good looking chart with that cup and handle. Here's PXD. It's a little bit more high pricey stock. It's up here around $161. PXD is Pioneer Natural Resources. Again, you have this cup. Here's a handle, and we broke out yesterday. We're up here at the 200-day moving average, and this is going to move higher. Here's the turnaround and the accumulation. You also have the other indicators starting to show improvement. Here's Parsley Energy. I believe they were going to release earnings either maybe tonight after the close, or they're going to. It was yes. I'm not sure which one. I think it's today. So we have a little bit of sideways trapping over here. We're coming up here against the 200-day moving average. Nice accumulation down here after this minor sell-off. So I think you can get another little break on here. If earnings come in as expected, you might get a pop in this thing after the close tonight if it breaks to the 200. Again, a nice little trade for you. Okay, I like this chart a lot too, and we had a pullback today. This is REN, Resolute Energy. You had this sideways action in here, going back to this 27 to 28 range. You broke out of this trading range yesterday. We came right back into it today, but we stopped at the 50-day moving average. If this holds right here, we come back above that line up here at the 30, maybe 30 and a half or so. I think you've got a nice little trade up here to the 50-day to the 200-day moving average. Again, you can see the accumulation seems to be slow and steady. When you see a stock going sideways, it's partially down, but you see the accumulation distribution line moving up. That generally means that the breakout will be to the upside. So keep an eye on that one. I kind of like that. Okay, one last one on this group was HES, H-E-S, and again, we ran into resistance up here around the 200-day moving average going back into September. Had the October pullback, which we got, and we just broke out above that 200-day moving average, and we're breaking out to a new 3 or 4 month high. You can see where we got the, you can even draw trend lines on some of these indicators. As you can see here, we broke out of that, and we're just breaking out right now on the accumulation on that. HES is one I think that is going to work its way higher. Okay, over the last few weeks, when we have these meetings, we talk a little bit about the portfolios that we're going to be rolling out next year. And I've given you several oil trades that showed up during those weeks. So I want to go over just to show you how those have performed. In the growth and income portfolio, we added HFC that last week at $40.14. We talked about that over here. Okay, we got that spike out of here. Since that time, we got today we were hitting 42.08. That's almost a 5% gain. That still looks higher. Great accumulation on that. In the sector industry portfolio, this week we added PXI, which is the Power Shares Energy Momentum portfolio. You listen to a lot of the analysts right now. This is a momentum-driven market, and energy stocks are no different right now. You have the momentum breaking out in that. You want to keep on that. Here's the, this is actually, you can almost look as a reversal head and shoulders. Here's the shoulder, here's the head, here's another reversal. If you draw a line across here to get that, if you go from here, the neckline to the top of the head, that's going to give you maybe a move up to about $40 on this PXI. We were at 37 and change over there today earlier. This is one, like I said, that we added yesterday. So we did get a nice pop in there yesterday out of about 2.5%, but you can buy this pullback. Okay, here's another one we added back in September, or actually the start of October. This is IEO. This is the iShares Gas and Exploration and Production ETF. We had this cup over here. Now we got this kind of a, this is kind of a cup and handle over here. We had a little flag pattern came out. We broke above that, broke above the 200-day. We had a big charge since we added this to the portfolio. This is up. We went from 58.75 to 62.88, so we're up about 7% on that. I think the IEO ETF is going to work its way higher. That's another way you can participate in this without picking individual stocks. We added high crush partners to the aggressive growth portfolio here. Last week we talked about it. This is not really a drilling stock, but they supply some of the sand for these frackers that as business picks up, they'll be seeing their business picking up. Accumulation, not quite what I like, but it is starting to show up. Momentum starting to pick up. As we broke above this resistance line over here, I think you can see HCLP move higher on that. Last one I want to do, this was HLX. This is kind of a gift. We bought this on the model portfolio over here at around 7 something. Right over here, they released earnings and said they're not looking to be bought out. They think they can move up on their own, which caused this thing to drop down $1. We're now moving that thing back up as earnings and revenues look good. Here was that selling, and we're starting to move up on the accumulation too. The MACD is getting ready to give a buy signal on this. We actually we're off a little bit on this today, so around 740. I think this is a gift. Anything in here that you can buy, you're going to get a trade back up here to this new high, which should represent about a 13, 14, 15% move for you. All right. Now, one other place that you can find some of these stocks when we see a sector like this breaking out, whether it's technology or oil. If you go to the industry group and actually click on the on the industry, in this case we look at the oil secondary. That was one of the stronger ones. So we look at this, and you're going to get a list of stocks. We'll list the stocks from strongest to weakest for you. So the work's already done. You can go in here. You're buying. You're finding the strongest stocks in the strongest sector in a strong market. That's where you want to be. So we're going to look at a couple of these ranked strongest to weakest. The first one here is DVN, Devon Energy. Okay, we just broke through the 200-day moving average. Got a nice trend line in place over here. MACD is powerful. Momentum is strong, and nice accumulation on that. So DVN looks like it's going to work its way higher. Another one off that list is Noble Energy, NBL. Okay, what do we have here? We have two different things. This is either a cup and handle, which means we had the breakout, which we're getting today, or if you want to go back and say this is a reverse head and shoulders, which is a continuation pattern, you can probably see a longer term. You could draw a trend line like this, add from this 28 down to about 23. It's $5. You can probably get add $5 on right here. You're probably going to trade up to around 32, 33 in this NBL. Nice accumulation in this also, and momentum's picking up. Okay, another one I think you can buy in here. This is called Marathon Petroleum, although in my book, this has gotten a little bit extended. They had this is a little bit too much for me. It's under accumulation. You can probably work its way higher, but I think I would probably wait for a little bit of a pullback on this thing before I'm going to jump in. We talk also a lot about the 30-day stochastic, and when you see it, when you're looking at a stock to buy, and you see that 30-day stochastic, it kind of measures the strength of the trend for me. And when it goes above 80, that means you can hold on to this thing and ride it. In this case, this thing went up to 80, back down here at 53, and stayed above 80 all the way up from 53 up to 62. So that's one of the reasons why I use that 30-day stochastic. I'm not looking for something overbought. When the 30-day stochastic goes above 80, that means that you're in a strong trend, and that it should continue until it moves off. Okay, here's another one. Here's oil field drilling. We looked at that. It was up the S&P 500. This is also, we don't have time to talk, but look at all the drillers. Almost every one of them is it looks like it's rated a buy or a strong buy. You can probably run through these things, put them on your charting package, see what looks good to you. Just real briefly from me, here I looked at a couple of the top ones. Here's RDC, Rowan Companies. As you can see over here, we had a nice move off the bottom here from the 910s. We're up here pushing 14 right now. We consolidated some of the gains, and now we're breaking out again over the 200-day, moving higher. You're hanging above that 80 level in the 30-day stochastic, so I think this thing's probably going to move higher. Accumulation isn't as strong as I'd like to see, but it's not bad. We're also looking like we're getting a new buy on the MACD short term. So RDC looks like a play we can get in here. Group here's DO, Diamond Offshore Drilling. We had a nice move off this bounce in here in 10.5, 11. You had the 30-day broke above 80 right over in here. That told you probably has a nice move. Good accumulation. Momentum looks fine. We had to break above the 200-day moving average. I think DO will probably work its way higher from here. I'm trying to hurry this up so we don't take you too long and waste your time. Here's another one on the industry group. This is oil field equipment. This also includes the services. Now, if you're going to buy one stock in this group, make it Halliburton. As you can see over here, Halliburton is HAL as a symbol. That's probably the one we want to buy in here. Here's again with Halliburton, you can see the reverse head and shoulders. All that trend line across here, you can go from about 38 to about 45. That's 7. Probably means you could probably have an upside target on Halliburton of about 52. We're right here at the 200-day moving average today. Breaks through that, you have a pretty good clean sweep up there. MACD has just gone bullish. Momentum looks strong. You had some selling in the Halliburton over here, but I think if you watch this accumulation distribution line, you're going to see this thing break out to the upside. So I would be a buyer of that. Now I wanted to show you one other one that showed up on that, which I'm not a buyer of. Now this is GIFI, Gulf Island Fabrication. And although you have this rising trend line, you have some squeaks in here. You're also seeing the MACD start to roll over. You have a negative divergence in the 14-day RSI, and you also have the accumulation distribution broke this upward trend line. So when you pick some of these yourself, I want you to keep an eye on some of that when you go to the smart charts and you're trying to pick some of these to buy. You want to make sure that you don't see the negative divergence showing up in some of these charts. Okay, the last one here, I know I've gone over too long, and this is actually an overdub that we're doing because we had a little problem with our webinar today, is oil field integrated majors. And again, you have a lot of stocks in here that are rated buys, strong buys, some big companies. You can look at here, some of the top ones we have right now. COP, ConocoPhillips, a nice move in here. However, you're getting another buy signal on the MACD. Accumulation looks really strong in here. Any type of a pullback or a bad day like this, I think you can buy it here. You're running that 80. I like that. I think ConocoPhillips COP can give you some more money. BP looks strong in here. You had a nice bump off here off the bottom. Nice consolidation period, and then we broke out above that. Momentum looks strong on the 14-day RSI. Nice accumulation, it's turning up again. I think you can trade that. The last one that we're going to look at today is XOM. This might be one, again, remember we just talked a little bit about when you see a stock that's consolidating in gains or it moves in here, and you see this kind of accumulation, this thing's going to break out to the upside. Right out here we're on 84. If it breaks above this 84 level, you're going to see XOM go into the 90s on this. This is up here on the secondary chart, is up here around 80. 86 or so. A little bit of negative divergence on this I don't like, but I'm gonna counter that with this. I think these are just showing you that momentum is slow during this consolidation period, but when you see it go sideways with this kind of accumulation, this is going to break out to the upside. So just to kind of recap on things, the market is looking a little toppy to me in here, but I do think we have a little bit more to go. We looked at the CTI last week. It stays bullish this week and also next week, but we're going to see, then we could see a little bit of topping process. But right now, just like a few weeks ago or a couple months into the financials, we bought the banks. They've had a nice run. A little bit of a pullback right now. I'm not sure why. But you've had the yield on the 10-year Treasury fall from about 2.43 down to, I think it was about 2.33 today. So that's causing the just a pause in the financials. Don't forget, we talked a little about looking at overseas banks. Some of the European banks, they're just beginning the process of starting to raise rates. We've already had 3 or 4 rates. Going to get another one. So they're behind us. And I think if you look at some of the French and German banks, maybe even England, you might be able to you can find some of those that are paying 4.5%, 5% dividends, and they're just beginning their rate hike process. They're behind us on that. I think you can pick up some of those. So right now we want to look to add to positions on the energy stocks and oil-related stocks. I think we can get probably a trade on these things going out at the end of the year. With that said, if you have any questions, please feel free to email me at thedoc@marketedge.com or support@marketedge.com. I thank you for taking time out of your busy day to join me for a little bit of time here. I hope you got something to offer for you. All right, we'll talk to you next week. Thanks.